Welcome to all of you. We are joined by Fannie Wurtz. Fannie, you are head of the Distribution and Wealth Division, Passive Business Line at Amundi. Olivier Mariée, Chief Executive Officer of CPRAM and Amundi's Head of Joint Ventures Supervision. Thank you for joining us. John O'Toole, you're Head of Multi-Asset Investment Solutions, and Benoit Tassou, Head of the French Partner Networks Division. Thank you so much for joining us. So Fannie, to start with, insofar as you oversee Amundi's digital wealth and private banking relationships worldwide, how do you think the opportunities we just heard will play out?
Actually, what has just been discussed is resonating a lot with all of the discussion we're having with wealth managers around the planet. Technology and digital are becoming central to everyone's agenda. And the drivers are at both ends of the spectrum. Individual investors, especially the younger generation, digital native, approach savings the same way they are approaching every aspect of their life. It's about the famous anytime, any device, anywhere. They are approaching it the same way than when they want to turn to Netflix to watch movie, to Amazon or Alibaba to buy goods, or to TikTok or X to read the news. Of course, 100% of them do not want digital. Most of them want to have an hybrid approach. They want the best of both worlds. They want a seamless digital experience, but as well a human approach and a human advice. Digital is no longer an option for those clients. It's the new norm for many investors, and one of the biggest opportunities for our industry to empower them to invest for their future. On the other side of the spectrum, on the wealth management side, there are three main drivers. It's about scale, it's about low cost, and it's about reach. All actors, be they digital native actors, traditional established retail banks, private and wealth managers are embracing digital. At first, to scale up their operation, to get a larger client reach, or to be able to issue low-cost savings solution. To embrace the digital opportunity, you need to rethink the full value proposal to either acquire or retain your clients. You do not offer the same investment solution via digital tools or in a branch. You cannot market them the same way. You need to engage differently with your clients, and you need to service them differently. In other words, digital investing is a story of transformation and growth, and it has impact on the whole value chain.
Thank you very much. Now, Benoit, Fannie just talked about the importance of combining human and digital approaches. So what's your view on leveraging tech to enhance this personalized human advice we should be after?
Yes, combining the best of both worlds, digital and human, is a top priority for all distributors and especially retail banks. We are witnessing a sort of hybridization of advisory thanks to technology. In my opinion, there is two clear different customer journey, transactional and advisory. Transactional needs to be clear, simple, scalable, and efficient. Its digitalization saves time and allows distributors to focus on client relationships. Advisory needs to be personalized, holistic, add value, high quality, and manage over time. And client expectation have become increasingly high. So technology allows us to look at new ways of delivering advisory. But technology, using technology doesn't replace human people because by bots. People still seek human advice for pending decisions, and for these threats, Amundi developed some new tools to support the clients. It's an advisory tool that is already being successfully deployed in the main French bank networks. It's a tool that can be used in a self-directed, self-directing mode. And at the end of the day, what is really important, the key point is not to replace the advisor, but rather than to enhance him, to improve the quality of the saving advisory provided.
So an augmented advisor, not a replaced advisor, of course, never. Now, John, looking at how we can foster more personalized investment solutions, what are the areas of development in goal-based investing in particular?
Sure. I mean, we are a provider of investment solutions, and our only role is to satisfy our client goals in that role. So client goals can vary, be it income generation, be it capital accumulation, be it capital preservation. But as an active investment manager, in all of those contexts, what we seek to do is capture upside and mitigate downside risk. Yeah, investor goals can also vary according to the initial starting point of wealth, the client time horizon, and the client risk tolerance. You know, digital tools exist and really can scope out these elements, make us understand the client better, make the client understand themselves better. What we've seen recently with cash rates reasonably elevated, fixed income bond yields are reasonably attractive. We're seeing a lot of demand for income generation strategies. So things like buy and watch, target income funds, these can provide some diversification to clients, but also give them a very targeted liquidity experience. If we move along the spectrum within our solutions business, within our wealth solutions business, we see huge continued demand for access to real and alternative assets, both listed and unlisted, and these are for clients that are seeking growth opportunities in order to grow their wealth. Additionally, all of this really comes to play when we talk about retirement and the retirement space. So all of these factors, I guess the one key issue in the long-term savings world is that, and we have the capacity as an asset manager to create ways to grow the capital, okay? And also de-risking strategies, so individualized glide paths in order for people to decumulate the savings that we've accumulated in order to answer this retirement problem, essentially. I would say that the level of flexibility that's derives in the marketplace now gives clients the ability to be flexible in their allocations, gives them the ability to access a broad degree of capabilities and customization. And customization and personalization can come at scale. And this is really the quite interesting dynamic that we see. Last thing I would say is that in all of our goal-based investing discussions with our clients, we always talk about responsible investing, and we see strong preferences to continue for impact investing objectives. And this is a very core element of client preferences, I would say.
Thank you very much, John. Now, Olivier, we've had several discussions here around how to use technology for more financial inclusion. So given your experience with our joint ventures, or your joint ventures in India in particular, what can you share with us? How do we go about it?
So financial inclusion has been possible thanks to technology, digital. That's very clear. AI, I think also when you look at savings platform, blockchain has made it possible in the past years. What we can see is that it has allowed to reduce transaction cost, because that was one of the key issues, improve transparency and foster financial literacy, because that's also one of the biggest challenge. What we've seen is that innovation like digital wallet, eKYC, which is absolutely crucial, but also micro savings platform, it has been really key in the past years. For me, the perfect example is what happened in India with SBI, State Bank of India. They developed a full ecosystem. They have, I think, about 450 million customers, and they have one app that they call YONO. You only need one So it means that it's an overall ecosystem with one app that help all customers to really have access to financial services. User can open savings accounts, with minimal documentation, with eKYC, and they can invest and access to also micro-insurance. We are talking about more than 1 billion transactions a day, so it's absolutely huge. The motto of SBI is the banker to every Indian. So it means what it says. On top of that, you have, of course, our joint venture, SBI Mutual Fund, the joint venture we have between SBI and Amundi. The objective of SBI Mutual Fund is to give access to investment to all customers in India. When I mean access to mutual fund, systematic investment plan, customer can invest, from $5 per month on this platform. They have access to financial literacy. They have access to education. They have access also to some, let's say, advice thanks to robo-advisors. So it's really something that makes sense. These initiatives, I think, show that a digital solution can bridge the gap between traditional banking services and, banking services for, people who don't have access to traditional these traditional services. All in all, I think by integrating digital and all this kind of solution, I think we build something, more equitable, more inclusive, and globally, we are talking about more than 2 billion people, who can access to this kind of services thanks to technology.
I would like to wrap up this conversation with a challenge, actually, for each one of you, since I'm going to ask you a question around predicting the future. What do you expect to be a major area of development for retail investment solutions in the next 5 years? And we've run out of time already, so I'll ask you to be very brief. Hence the challenge.
Let's be clear. The financial needs of our European and Asian economies are massive. They are massive in Europe because there is a retirement challenge to address. There is as well the green transitions to operate and as well the real economy to finance. They are also massive in Asia, where wealth is growing and strong demographic behind, and also some retirement question in some countries. This means that our industry will need to adapt and to address two major topics. The first one is financial education, to guide and empower more individual investors to participate in capital markets. And the second one is investment accessibility, financial inclusions to everyone. Digital will be, by essence, a great way to empower more individual investors.
Thank you very much. Olivier, do you want to go next?
So for me, there are many trends, but the three key trends. The first one is value for money. I think value for money will push all financial services as companies to build tailor-made solution at a reasonable price, and including this in every step of the value chain. It will drive a customer-centric culture. For all asset manager, I think even though it's present today, but I think it would be an accelerator. The second thing is the second trend is I think democratization of new asset classes like NFTs, like of course private equity, private debt. This is something that is going to happen, and we can see that. And last but not least, of course, financial inclusion. This is really something massive that is going to happen. And again, we are talking about 2 billion people around the globe, and this is something absolutely key for our society.
Yeah, massive opportunity here. Benoit.
My feeling is that technology is putting advisory at a crossroads, and actually the potential is very huge. Retail is knocking on the door to have a better access to advice. And there's a lot of cash which is not invested, ready to go. So from my point of view, the successful of hybridization of the advice with a good balance between digital and human will be crucial.
Going back to that. John.
Very briefly, for me, it's all about retirement, personalized retirement solutions. The problem we face, the positive problem with longevity, is that we're going to need to save more, and governments are probably likely not going to be there given the financing conditions that we see. So it's a personalized savings for retirement and flexible solutions and the capacity to respond to changes on that journey.
Well, thank you very much. And please join me in extending a big thank you and a round of applause for our guests. Thank you for your insights. Much appreciated. Thank you.